With home prices setting record highs and mortgage rates on the rise again, the question remains how the U.S. housing market is going to get back into balance in terms of affordability. So many potential buyers are being locked out of the market, and something has got to give. In today's video, we're going to take a look at how housing inventory levels are trending across regional markets and how rising supply might bring down prices in 2025. Let's get into it. In my last video on the U.S. housing market, I pointed out how unaffordable homes are for the average buyer. The average housing payment as a percent of median household income was at 40% in December, well above what would be considered a healthy housing market. This market imbalance can't go on forever, and something's got to give at some point. We aren't likely to see mortgage rates come down in the short term due to what's happening in the bond market. I go into more depth on that in my video I released back in December. Check out that video if you want more details on it. That leaves prices coming down as the only remedy for this market imbalance. Yet prices are setting record highs each month. As of December, the U.S. median home price was $441,000 in December on a seasonally adjusted basis. Housing demand is already weak and prices haven't come down yet, which just leaves an increase in supply as the only way prices are going to come down. At the U.S. level, we are seeing an increase in market inventory, but it is still well below where it was before the pandemic. But we have to remember these national level statistics are an aggregate of all the regional markets across the country. Let me show you an example of what a market looks like when the supply dynamics are a lot different. This is the median home price for the Austin, Texas metropolitan area. Looks a lot different than the U.S. price, doesn't it? Let's put them on the same graph so you can see the difference. While the U.S. median price is setting new record highs each month, the Austin median price is now down 14.3% from its all-time high. What makes up the difference between the two, you ask? Well, it's not on the demand side of the market. Austin home sales are well below pre-pandemic levels like the U.S. overall. The Austin sales to list price ratio is staying below 100, meaning that homes are selling below list price on average. But we're seeing this in the U.S. market as well. In Austin, we're seeing the same weakened demand for housing that we're seeing at the national level, yet home price trends are dramatically different. What gives? I think you know where this is going. Let's check out the supply side of the market. Here's the Austin market inventory. It is at levels way above where we were before the pandemic. Here's another way to look at it. This is the Austin month supply, which measures how fast the market inventory would be exhausted at the current pace of sales. We can compare this directly with the U.S. month supply. The difference in supply trends is clear. Austin, Texas has a market inventory well above the pre-pandemic levels, whereas the U.S. overall is still below, almost reaching the pre-pandemic level. Austin, Texas is an example of what happens to prices when supply increases well above historical levels. With demand in a weakened state, the big increase in supply brought home prices down by more than 10%. This begs the question, what is happening with all the other regional markets? Are we seeing something similar, and when will this all impact the national level data? There are hundreds of metropolitan areas across the U.S., so it's not practical to go through them all in one video. But I did do some analysis to try to get a sense of the momentum at the regional level of rising supply. Using data from Redfin, a national real estate brokerage, I calculated the percentage of metropolitan areas that were seeing supply levels above the pre-pandemic average. When I did this, I found that in December, there were 27.5% of metropolitan areas where supply was higher than pre-pandemic levels. Now, 27.5% isn't a really high portion of the nation where this is happening, which is why we're not yet seeing it in the national level data. But what I find more meaningful from this analysis is that the percentage is steadily trending higher. When this gets above 50%, I think we're going to start seeing a change in the trend for the U.S. median home price, and that is where the mainstream media narrative regarding the U.S. housing market is going to change as well. The housing market is not like the stock market. It takes months or years for changes in trends to take hold. If this regional supply metric I created keeps heading higher, a downturn in home prices at the national level is highly likely, and then we will see a change in the media narrative. When sellers start reading in the national news that the national housing market has started a downturn, they may be inclined to start accepting offers lower than they originally expected, which could then accelerate a downturn. Will it be enough to cause a housing crash? That remains to be seen. If you want to stay up to date on the latest developments in the U.S. and regional housing markets, make sure you're subscribed to this channel and hit that notification bell down below so you won't miss my next video on the topic. So, what do you think? Will supply keep rising in markets across the nation? And will it lead to a crash in home prices for 2025? What's happening in the market in your regional area? Let me know in the comment section down below. And if you like this video, don't forget to give it a thumbs up to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.